Cool. Well, we'll jump right in. I'm Rob from Netcapital, and this is Brian and Myles from Rapunzl, and we're gonna do a little live Q&A.
All right. Awesome.
So why don't we kick it off? Why don't you guys introduce yourselves and tell us a little bit about the company?
Sure. So my name is Brian.
And I'm Myles Gage.
And so we met freshman year of high school and kind of bonded over the idea of investing. And we quickly realized how atypical that was of kids our age, and that there was a huge lack of financial knowledge and financial literacy amongst our generation. And so we started Rapunzl to combat that. And so Rapunzl's a simulated trading application that allows users to trade fake portfolios of stocks and then enter simulated investment competitions. So it takes the gamification idea of DraftKings and kind of combines it with an educational way to approach financial markets.
Yeah.
Great. Can you guys tell us a little bit about your backgrounds? And kind of, I know when you met, but talk to me a little bit about kind of what you guys studied and what the last couple of years has looked like.
So I went to University of Illinois in Champaign. I studied finance, and I spent 2 years prior to 2019 working in commercial real estate space at CIBC Bank. But basically, at around the time that I graduated from U of I, Brian and I started Rapunzl, and so I was doing both of those simultaneously. But I've since transitioned to working on a full-time role here at the company.
And so I went to Amherst College and studied math, but essentially Myles and I stayed connected through college, and it was always talking about investments. And so the origin of Rapunzl came about my senior year, where we were going back and forth, and we had so many conversations with our friends about what we were investing in, what stocks we thought to buy. And we actually started by looking for an app that could aggregate these conversations and give us an investor community.
But we realized that there were no platforms that were really out there like that. So we saw that there was this huge opportunity to not only create an educational platform, but a social platform that allows users to discuss their investments in a collaborative learning environment.
Very cool. So let's dig into the product a little bit. Talk to me about what it looks like, what it feels like. You talked a little bit about why you're doing it. Talk to me a little bit more kind of when you dig into the product itself, what it looks like.
Yeah, so what we really wanted to do is make it as simple as possible and really take a lot of the complexities of finance and simplify them for our average user. So we walk users through the idea of placing their first trade and entering a competition, and it's currently for iOS and Android. And then what we really try to do is emphasize the social features in the app. So users are connected with their Facebook and LinkedIn peers automatically when they create an account. And from there, we really employ this idea of allowing users to crowdsource investment ideas from the broader community. So by accessing the ongoing competitions, users are able to see kind of the community's leaderboard, and by interacting with those leaders, you're then able to see the positions in their portfolio and what's driving their returns. So it's really decentralizing the idea of a financial advisor, because when we were first starting this company, we found that most people don't trust financial advisors, particularly in the aftermath of 2008. And at the same time, people trust their friends, and particularly with some of the more growth stocks in the technology space, young investors are kind of seeing the future. For instance, like when we were doing work with high schoolers before Snapchat kind of tanked with the new update, like you could talk to everyone in the class and you'd say, do you want to buy Snapchat? And the high schoolers are like, no, who would do that? And so it was kind of like tapping into those community insights. We want the users to be able to do that. And then that's also kind of a monetization opportunity on the other side of it.
Nice. And so to clarify a little bit, is there a kind of fantasy version of the app where you get basically monopoly money or fake dollars to invest and see how it would have done? And then is there a way to also connect it to a real account with real money and your real investments?
Yeah, so currently it's offering the simulated trading functionality with those competitions. And kind of over the course of 2019, that's the functionality we're building out. So essentially envisioning Rapunzl as this huge marketing funnel that is then guiding users into brokerage accounts and subscription services, kind of with the idea that there will be a greater adoption of financial markets and investing amongst millennials and younger generations if you first teach them so that they're able to understand where their money's actually going.
Versus just creating a brokerage platform and trying to get young people on it. Because if they don't know what they're doing, they're not really going to use the platform and they're going to be fearful. And that's why we wanted to offer the fictional simulated platform first to get the appetite and to really get them comfortable with investing in these financial markets.
And so why the name Rapunzl?
So we really chose Name Rapunzel because people view the returns of Wall Street and the world of investing as something that's perched up in this ivory tower that's inaccessible for most people. So we're essentially rolling down their hair and allowing everybody to climb the tower to financial success, or at least creating a more equitable playing field.
I like the analogy. So talk a little bit, you touched on it a little bit, but talk a little bit more about the business model. How you guys plan on generating revenue, both in the short term and the long term?
Yeah, so in the short term, we've really focused on the education aspect of the platform. And so we work with a Chicago-based nonprofit, and we're able to work in a fiscal sponsorship with them such that we are doing a deal with Wedbush where we work with 2 schools out there, and they're paying us for the implementation and for the hosting of scholarship competitions. And so we've replicated that model. We're doing some work with the Federal Reserve in Chicago. We're working with CIBC and BMO Harris. And essentially, the banks are contributing capital into kind of this general purpose Urban X scholarship fund that Rapunzel's then able to use that capital to kind of market the app and grow it. And so that's kind of in the immediate term how we've kind of been making money to date. And then in 2019, the additional revenue streams are allowing users to open trading accounts and kind of receiving a commission upon account openings. And then we're also in discussions with NASDAQ currently to distribute our user sentiment data to large institutional investors. So kind of the idea of we have these weekly, monthly, and then longer term investment competitions, and tracking users' preferences in those different competition entries, we're able to have kind of time-sensitive sentiment analysis on individual stocks and kind of show how users' perceptions of different stocks and the market as a whole are changing over time.
And that really goes to Brian's point about when we were in the classrooms talking to the students about Snapchat and them not really liking the new update, and which in return we saw Snapchat's stock price go down. And so obviously that market sentiment will be on a grander scale, but we really feel that how these young people are adapting, or how these young people are really responding to trends or different events is very critical, which I feel, and we feel, is often overlooked by some of the institutional investors, but we think that there's an opportunity there, and that data is very valuable.
Well, and it's just the factor of there's so many funds out there that are paying hundreds of thousands of dollars a month to kind of parse Twitter and use machine learning to understand sentiment towards different stocks. And in our minds, if you shortened the duration of a competition to a day and had users pick up or down on a few select stocks, rather than kind of parsing information and trying to assume what people believe about different securities, you can simply ask them in a competition, and the prizes of the competition are less than what we're making on the sale of the data.
Nice. And talk to me a little bit more about the scholarship competitions themselves. What are the scholarships for? How many people are winning? Talk to me a little bit more about what that looks like.
Yeah. So in
2018, we partnered with the Federal Reserve Bank of Chicago for their Money Smart week. And basically, we realized that they didn't have any programming for high schoolers. So what we did was we created an investment challenge in the city of Chicago, in which we got over 2,000 participants. And we had $20,000 in scholarship prizes, which we awarded the top performing portfolios after a month-long period. And so while, your performance over a 30-day period isn't indicative of you becoming the next Warren Buffett, it still is getting people engaged with financial markets who otherwise wouldn't get exposure to it. And so really what these scholarships was, one, we had cash scholarships for college, which went into a 529 savings plan. And then we also gave fractional ownerships of stock using a company called Stockpile.
And so long-term, the idea is that a large portion of our competitions are going to have prizes that are fractional shares. And then we'll place those fractional shares into Rapunzl brokerage accounts. So it's kind of a cost neutral marketing scheme for us in terms of the plan, or the kind of prize payout is equivalent to the commissions that we're receiving. And then I think 2020 and beyond, the idea is to evolve from an API integration with existing brokerages to kind of begin hosting those brokerage accounts through a BD or broker dealer relationship ourselves.
And so is the target market right now, or talk to me a little bit about the target market. It sounds like it's starting with high school age students, but how is that going to evolve over time?
Yeah, so there's two distinct markets. There's the social impact side, which is working with underserved high schools, particularly in urban areas, and trying to kind of be the first exposure to financial education. And then on the flip side, there's juniors and seniors in college and kind of higher education. And on that side, we're kind of targeting users that are entering their peak earning years in the next 3 to 5 years and are looking to open brokerage accounts. And so the way the two target markets kind of interact is there's such a lack of trust in the financial industry. And as people are trying to look to where they would begin to invest, there's this idea of wanting to understand your money, but there's also the idea of trusting where you put your money. And so the social impact side and the work with the high schoolers, it kind of has helped us generate cash flow and helped us develop the platform, but it's also really kind of building that trust and that public goodwill
to go to the higher ed space for those juniors and seniors that are in college.
And there's a different demographic shift in terms of how we market the kind of live trading side, but long-term, what we're kind of growing the college side to sustain the high school growth, to kind of vertically capture users' financial life cycle. So from the beginning, when someone starts with the question, what is a stock? We really want to take that question and then use it as kind of the guiding message through the user's experience as we kind of monetize different financial products to them along the way.
Interesting. And so you've talked about kind of the target demographics of high schoolers moving up into college age, and I imagine beyond. In terms of your market regionally, I know you started in the Chicago area. What's the expansion plan kind of geographically?
So Brian mentioned working with Wedbush. So Wedbush Securities is out of Los Angeles. And basically what they want to do is replicate the programming that we did last April here in Chicago in a couple schools in LA. And then we also have something in the pipeline in New York City. And so basically that's kind of how we're doing it. We started in Chicago and then are hitting the coastal regions and then plan on hitting other metro areas after.
Well, and the way that we've done it by creating these partnerships, be it with the Fed or CIBC or Wedbush Securities, is that we're not having to have any high capital expenses in terms of investing in new regions. We're making money by expanding to LA with Wedbush. And so the idea is that we are targeting the corporate sponsors initially and then allowing them to largely dictate what cities we're moving into. And that's why we're excited about the LA and New York partnerships to show viability of kind of this model that we've instituted in Chicago. But I think our 2-year growth plan really works intimately with the Federal Reserve, just because we're executing with them in Chicago this year, and we've had conversations about expanding to the other branches. And so with 13 Fed branches, we just really see kind of that legitimacy and entering kind of the education space with their backing as the most viable growth strategy. Plus they foot the marketing bill, and we kind of are able to generate revenue as we're scaling.
Very nice. Switching it up a little bit, talk to me about kind of what are the big challenges you faced and issues so far, and how you've addressed them.
Tech talent.
Yeah, so I think one of the biggest challenges we had was the technology and our stack. And so we initially worked with an outsourced team and then transitioned to a different team before finally bringing our technology internal. So we had a lot of platform reliability issues in 2018. And fortunately, in the past few months, we've started working with another company, Primal Quant, and kind of their back end has resolved a lot of our existing issues. And so now, rather than being written in JavaScript, it's a strong typed language, and we're just seeing a much better performance of the platform. So that was probably the biggest hurdle. And then the second one was particularly for the high school side of things, it's building trust with the community. And so it's not difficult for us to get sponsorships and to get corporate buy-in because it's a great white labeling brand awareness opportunity for them. But it was a surprising challenge that you can't simply send an email to a school, and that there is a much more in-person community outreach aspect, particularly to the high school programming that we coordinate.
So yeah, with that, I mean, so that was a little bit of a learning curve, just understanding the dynamics of actually getting into these schools or organizations to get in front of students, just because they're not going to be as forthcoming just because they don't know what you're trying to gain from this. So it's really, as Brian was saying, just establishing that credibility and the legitimacy of like what you're offering. And so we really feel that we were able to build that over the past year or so with the work that we've been doing within the city, which has helped us, which has provided a runway to do expansion in other cities.
All right. Talk to me a little bit about what 2019 looks like for you guys. I know you're raising right now. So, you know, what does this year look like? What are the big goals?
Yeah, so I think the big goals are executing with Wedbush in Los Angeles. We have a deal with Greenbacker Capital in New York City, which is kind of an initial foray into the East Coast market that we really want to do well there. But I think ultimately entrenching ourselves in the Chicago region and executing on this deal we have with the Federal Reserve currently is kind of positioning ourselves to dramatically scale in early 2020. And I think during the course of this year, it's kind of beefing up the technology. And now that we kind of have the traction on the user growth side, it's instituting additional ways to monetize the user base, such that when we really have that big marketing push at the end of 2019, we're marketing users into a platform that's able to monetize the users rather than simply retain them. Right.
Great. And then also looking ahead, without getting too speculative, you know, as you talk to investors, what do you see as potential exit opportunities for the business?
I think that largely what we believe is that as we position ourselves as this exciting marketing funnel, attracting young investors, that the interest will be twofold from larger existing retail investment shops, kind of the E-Trades or Charles Schwab's of the world, which are trying to stay relevant in young adults' financial lives. And additionally, I think that there's the opportunity from kind of a Robinhood type tech companies or more of the robo-advisor space where we could easily see slogans such as "Don't play with your money, play with Rapunzl," and the idea that kind of you teach users to contribute $20 a month to an account similar to like an Acorns, but using Rapunzl as the marketing and engagement tool for other fintech platforms. We kind of see both of those acquisition opportunities as kind of likely exits.
Right.
Great. And, you know, as we wrap up, as you know, kind of as a shout out to, you know, any potential investors, is there anything else you'd kind of like them to know as we wrap up?
Invest smarter with Rapunzl.
All right. Well, great guys. Thanks for taking the time. We appreciate it. And this webinar will go, it'll get sent out to the Netcapital community, and it'll go live on YouTube as soon as it's kind of ready. But again, thanks for taking the time. We appreciate it.
Yeah,
Thank
awesome.
you. Thank you.
so
And
much,
thank you
Rob.
everybody for watching this as well.
Yeah, thank you for tuning in.
Yes.